the rules are even for each team, and we figure out who has the better skill with these artificial set of rules that aren't reality. And
Right.
they're not reality because we need referees on the field to enforce artificial sets of rules. So if money is that, it's an artificial set of rules, then anything could be money. Even nothing could be money. But the question is that what is money really nothing?
No.
No,
No.
because it has to go into the past. And in order to go into the past, you have to be connected to something. So then the
Yeah,
question
no,
is,
absolutely.
if it's nothing, why does it have value? Because when there's a bubble, people can be insane and they can value nothing. It's possible, but it's
Oh yeah.
still nothing. And once they value something instead of nothing, then nothing will be worth nothing and something will be worth something. I think we are approaching the end game. I've thought we've been approaching the end game since 2008. So either, no, not in 2008. I was just waking up back then. But what's the timeline? I can't. I don't know. I've been wrong about this so many times, but I mean, gold and silver are moving so quickly in both directions. The volatility is increasing. And the last piece of news that I saw is that Italy, whatever their Congress is called, is set to pass a law or a suggestion or some kind of statement that the gold that's owned by the Italian central bank, which is now subservient to the ECB, but it used to be independent of the ECB, that the Italian gold now belongs to the Italian people. And then the ECB is like, we're strongly encouraging you to not say that. and, and then the funny thing is that they're damned if they do. I'm talking about the ECB, damned if they do, damned if they don't, because if they say, no, no, you can't pass that, or if they express any kind of strong opinion other than that, we strongly suggest that this is not a smart thing. And then in the article I read on Reuters is like, quoting some ECB official saying, I don't even know what this means, but we discourage it anyway because they have to pretend that they don't care about gold, but at bottom they know that it's what's backing them.
Right.
So if each country takes ownership of its own gold and hollows out the ECB in that way, it's basically what I'm preaching on the Endgame Investor. It's like you stack gold and silver not necessarily to make yourself rich or even to get through the end game or to make sure that your family's okay. All that is a side effect, and it's a good side effect. It's a welcome side effect. But
Right.
the point is, we want to hollow out the system because we don't want them to be able to inflate and spend money on lockdowns and pharma subsidies and war and everything else that they spend on. Once they can print as much currency as they want. We call it money, but it's not money. But they can once they print, but it doesn't help them, then all of their power is gone. And we can see this happening now in Europe with Italy requesting its gold, or not really requesting it, just like saying that that it's owned by the people of Italy instead of the ECB.
Italy's gold reserves, roughly 2,452 tons, rank third globally, behind only a few nations. Under the new amendment, that gold would no longer be just the central bank's asset, but a national treasure belonging to the people. The shift reflects a growing distrust of centralized credit systems. It challenges the idea that currency, fiat or digital, can underpin long-term value. If more countries follow suit, the monetary framework built on debt and credit could gradually unravel under its own contradictions.
Yeah, I was going to bring that up to you next. What are your thoughts on what's happening with Italy, how they're demanding their gold back?
This is just the next step in the process. And I think we saw that Germany demanded its gold back from the Fed,
Yeah.
maybe in 2013, 2014, sometime early on.
Hmm.
And Italy is a basket case. They have like the second highest debt to GDP in the world, I think. Maybe third highest, I think, is Japan, and then Greece, and then Italy.
Hmm.
And I think they have the third or fourth largest gold hoard. Right. So once you see legislatures start to pay attention to gold and declare that they own it instead of a central bank, we're really getting to the core of the issue here because as we say, gold and silver are money. The only problem is people don't want to admit it. And so they say, oh, it's just a hedge against inflation, or it's a way to protect yourself from tail risk, or it's a way to protect yourself from chaos. But like, why is that? Why is it a hedge against inflation risk? Why is it a way to protect yourself? Because it's money. Because But you say that, you can say that over and over and over again, and it doesn't click until everybody starts seeing the value of their credit falling and falling, and they realize, well, this isn't money, it's not working, so I have to go back to money itself. And no matter how many times you say it, it's like you can only understand it instinctually,
Right.
right? Understanding it intellectually is one thing, but even if you could prove it, and I try to prove it, that's why I focus on the Misesian regression theorem or regression principle that all prices have to go into the past because they all have to be based on the past because otherwise prices don't mean anything. And if prices don't mean anything, you may as well be in a zombie apocalypse because if prices are meaningless and nobody knows what to do, and then they start eating each other.
Yeah.
So you can prove that intellectually, but even for people like us who understand it intellectually, we still think of the dollar or the Canadian dollar, the shekel or wherever it is you are. We still think of that as money because
Hmm.
we see our wallets full of that. Like you put gold coins in a wallet, you're like what am I in the 18th century? It doesn't feel like money. It feels like
Right.
I'm a whacked out crazy guy who's
Right.
like carrying a pouch of gold or silver with me, like why am I doing that? Like, that sounds nuts, and it
Right.
still sounds nuts to me. But intellectually, I know. But then when it doesn't, when the wallet full of digits, whether they're Bitcoin digits or fiat digits or whatever kind of digital data, whenever everything goes down and we don't have access to those digital whatevers or paper whatevers, then we're all going to start carrying around sacks of gold and silver. As crazy as it sounds, it's going to happen.
Behind modern economies lies a dense web of credit: dollars, euro notes, bank credit, financial derivatives, successive layers resting on the promise of backing. But those layers are fragile. The real foundation, precious metals like gold or silver, when you hold physical bullion, you bypass the system's built-in leverage. That's not about getting rich. It's about stepping outside an increasingly unstable structure. When credit collapses, whether due to inflation, reckless spending, or systemic debt, tangible assets offer stability. In that sense, stacking gold isn't a speculative gamble. It's an insurance policy against structural collapse.
Well, let's sharpen that,
Yeah.
okay? So they don't, first of all, they don't have any money at all because
Mm.
they only have derivatives and they only have credit derivatives. Even the dollar is a credit derivative.
Right.
But they don't even have dollars is just one is just like there's layers of credit. There's gold and silver, and then you start after gold and silver, you start the credit layers. Right? So they have credit, they have your credit, but what they do is that you give them credit level one, like dollars or Canadian dollars, that's level one. And then they take the dollars and they give you credit level two, three, four without telling you that it's credit level two, three, four because they're using credit level one to generate more credit for somebody else.
Right.
So they have like a ghost of your credit in either debt to you or stocks held by a brokerage. Even the stocks that held in your brokerage, a lot of them are lent out. So the credit that you think you have in your brokerage isn't exactly that level of credit. It's some higher level of credit derivative. So it's like you have the reflection of what you're supposed to have.
Right.
But then when it all comes crashing down, it's the currency itself that is revealed as the reflection of gold and silver that it actually is. And
Yeah.
that's the final piece that nobody can accept, not even us, because still we don't want to walk around with gold and silver in our pockets, but we're still intellectually aware that's going to happen.
Hmm.
So when the final credit layer goes away, then everything breaks apart and we're in a completely different world. I think AI goes away. I think all this stuff goes away because I mean, I've looked at AI's earnings and the fact that it's kind of getting stupider. It's not getting smarter. It's getting dumber.
Right.
Uh, and it's not. I mean, I'll go into some kind of idea that I had this week or last 2 weeks. I was discussing it with my wife. Like, if you think about the first story of the Bible, the snake, right?
Hmm.
If you take that as an extension of Eve, right? The snake is only telling her what she wants to hear. It's an external intelligence that's just telling her what's comforting her. Like the fruit is good, take the fruit. What.
Right. Like the AI market or
So,
the market right
yeah,
now.
that's what AI is. It doesn't lead anywhere. It doesn't lead anywhere good. I mean,
Hmm.
this
No,
all this is going to go away.
Fiat currencies and credit systems depend on collective belief and perpetual issuance. As long as institutions can print, lend, trade, and leverage, the system stands. But when confidence falters, when debts pile up, inflation rises, currency value erodes, the illusion breaks, prices become meaningless, credit becomes toxic. Historically, societies have supported such breakdowns by resorting to real assets, hard money. Gold and silver don't need printing. They don't need central banks. They derive value from scarcity and universal acceptance. In a moment of collapse, they become what money was always supposed to be.
What are your thoughts right now on Bitcoin? You know, the Bitcoin crowd has always been like, "Oh, Bitcoin is the digital gold." What would you say to them now when you see Bitcoin drop 20, 30% while gold is still and silver is holding its value?
What do you mean? Bitcoin doesn't drop 20 or 30%. Bitcoin is Bitcoin, and right? Bitcoin is, it doesn't matter how many dollars it's worth. It's still money. No, obviously it matters, right? When in credit crazes and boom cycles, right? People value a whole bunch of crazy stuff. That's what a bubble is. It's people valuing things that they wouldn't otherwise value.
Right.
And the quintessential, I'd say, piece of proof or evidence or proof, whatever you want to call it, that this is the craziest bubble in history is that people are literally valuing absolutely nothing.
Yeah,
Nothing.
it's like tulips. It's worse than the
No,
tulips.
no, but no, nobody can tell me what a Bitcoin is. And then, oh, it doesn't matter because money's a point system and it's a fiction that we all created. But that's the basic question, right? What is money a fiction? Is it a point system that we all made up, like a football game? Like, oh, if you reach the touchdown, you get 7 points. If you kick a field goal, you get three. And we
Right.
make up these rules, and then we set up artificially this like playing field where the rules are even for each team, and we figure out who has the better skill with these artificial set of rules that aren't reality. And
Right.
they're not reality because we need referees on the field to enforce artificial sets of rules. So if money is that, it's an artificial set of rules, then anything could be money. Even nothing could be money. But the question is that what is money really nothing?
No.
No,
No.
because it has to go into the past. And in order to go into the past, you have to be connected to something. So then the
Yeah,
question
no,
is,
absolutely.
if it's nothing, why does it have value? Because when there's a bubble, people can be insane and they can value nothing. It's possible, but it's
Oh yeah.
still nothing. And once they value something instead of nothing, then nothing will be worth nothing and something will be worth something.
What's happening in Italy is more than political posturing. It's a blueprint for reclaiming real financial sovereignty. If nations reclaim their gold, if individuals begin to divest from fiat-based credit and allocate savings toward real bullion, the foundation of the current debt-driven system starts to erode. Some institutional investors are already increasing allocations to precious metals, not for hype, but as a safeguard against currency debasement and systemic risk. When people think less in terms of fiat returns and more in terms of tangible, passive value, the entire equilibrium shifts toward resilience, not speculation.
Yeah, and I feel like that turning point is happening even at this moment where you start seeing institutional investors, you start seeing people starting to wake up and they say, you know what? If the whole world just allocates 3, 4, 5% more of their investments into gold, then people are slowly starting to wake up. But I feel like but you're right. Like we're still basing our money off of nothing. Like we're not going to walk around with gold and silver in our pockets yet.
Not yet.
Yeah, not yet. But because I feel like we're working towards a dollar, like for hourly, we buy groceries with fake dollars, fiat currency. So maybe that's why we're just holding around that currency in our pocket, you know?
Well, let's sharpen something you said about 10 seconds ago, right? If people allocated 3, 4, 5% to gold and silver, right? First of all, we flip that on its head, right? When you allocate to gold and silver, you're not allocating your money to gold and silver. You are divesting from the system.
Right.
You're not investing in anything. When you have physical gold and silver, you're divesting from everything else. You can't invest in money. Money is what you get when you sell your investment,
Yeah,
right?
well
When you
said, well
sell
said.
when you sell a position, what you're doing, like how we do it colloquially in a brokerage, right? We sell a position of stock with the sell button, close position button, and then we see that we have a whole bunch of more dollars in our brokerage account. Fine. So that's divesting from whatever the dollars were invested. But the dollar itself is an investment. It's an investment in the Federal Reserve as a solvent bank. That's
Yeah.
what it's a Federal Reserve note. So if you want to divest from that, what are you going to, how do you do that? The only way to go underneath the Fed is with money. So what, but that's the problem, Ivan, because when you start saying, oh, if everyone allocated instead of like 0.1%, 2, 3, 4, 5% to gold and silver, but because it's divestment, once people start to divest to that degree in the entire fiat debt system,
Right.
then it doesn't stop there. It goes to 100% eventually, and they sell everything,
Hmm.
right? And then the only thing that has value as money is gold and silver. Yes, real physical assets have value, but very illiquid value, and it depends who you can sell it to, right? Right? Your house will have value, but if you have no food and all you have is a house and you have to sell your house for like 2 weeks of food, that's not a good deal. You could do
No.
it,
Yeah.
but you'd rather have a liquid commodity to do it with so that you'd still have a house and you'd have like 3 or 4 or 5 ounces less of silver. That's fine.
Yeah.
So you don't stop at 2, 3, 4, 5%. Once we get to 2, 3, 4, 5% of people buying gold and silver because it's not because they want to allocate 5% because their investment advisor said, "Oh, now I'm up to 5%, and this is what it
Right.
should
Right.
stay at." It's like it's as if you could like tilt the slide of the entire system and then not expect everything to fall down
Right.
it.
Yeah. Yeah.
It's
No,
gonna
you nailed it. Hey, you
it's
nailed
gonna
it.
happen.
If enough people, institutions, or even nations lean back toward gold and silver, the old paradigm of indefinite debt expansion may fade. Currency, credit, exotic financial instruments, they may shrink in importance. Physical assets and real value might take center stage. We may enter a world where money isn't an endless stream of digits or promises, but something solid, universally recognized, and scarce. As we watch debates in Europe over gold ownership or private gold holding levies, we may be witnessing the early stages of a reset, a return to fundamentals. That shift could mark the true beginning of the end game.